The silver market just experienced one of the most dramatic squeezes in modern history. And what's happening right now in Shanghai is sending shockwaves through global markets. They could reshape the entire precious metals landscape. If you're invested in silver or thinking about it, what I'm about to share could change everything you thought you knew about this market. Let's start with the bombshell news coming out of China. Silver inventories on the Shanghai Futures Exchange have plunged to their lowest levels in nearly a decade. As of February 9th, 2026, available silver stocks stood at just 318 tons. That's down from 349 tons just 3 days earlier. But here's where it gets truly alarming. This represents an 88% collapse from the all-time high of 30,091 tons recorded back in January 2021. We're talking about a massive drawdown that's creating unprecedented tightness in the physical silver market. What caused this dramatic inventory drain? Throughout 2025, China exported heavy volumes of silver to London to ease global supply pressures. While that helped international markets temporarily, it absolutely devastated China's domestic inventories. Now the chickens are coming home to roost. The Shanghai Exchange has responded by increasing margin requirements on silver contracts to control volatility and reduce speculation. But here's the critical point. Despite these measures, there's been no fresh inflow of metal into exchange warehouses. The supply side stress remains very real, very persistent. And get this, the price premium of Shanghai silver over Compricant's futures remains unusually elevated, making imports commercially unviable. This creates a closed loop where Chinese buyers are essentially trapped in a tight market with no easy access to global supplies. Now let's talk about the price action that's captivated the entire commodities world. Silver surged an absolutely staggering 144% during 2025. Yes, you heard that right, 144%. At its peak in late January 2026, silver touched $120 per ounce before experiencing a brutal correction back to current levels around $75–78. According to JP Morgan's lead precious metals analyst Gregory Shearer, this wasn't just your typical bull market. This was a perfect storm of four convergent forces: persistent physical deficits since 2021, massive investor momentum, tariff uncertainty around Section 232 critical minerals, and a physical squeeze as metal moved from London to New York. Here's what made this rally different. Global silver ETF holdings were actually declining even as prices soared. So where was the buying pressure coming from? Retail investors in India and China went absolutely wild, driving prices from $80 to that $120 peak in just weeks. This was speculation on steroids. Markets that rise that fast rarely stay elevated. The nomination of Kevin Warsh as Federal Reserve Chair triggered a dollar rebound that punctured the bubble. Silver crashed nearly 30% in a single trading session on January 30th. The current price around $75 represents a more than 35% correction from the highs. Despite this volatility, the underlying fundamentals remain incredibly bullish for silver. The market is heading into its sixth consecutive year of structural deficit in 2026. That means global demand continues to exceed supply year after year. Industrial demand tells a powerful story. About 60% of silver's annual consumption goes to industrial applications, everything from electronics to electric vehicles to AI data centers. Silver is one of the world's best conductors of electricity, making it absolutely essential for modern technology. But here's the headline grabber: solar panels. Silver demand from the solar industry has exploded from 80 million ounces in 2016 to over 200 million ounces today. This sector alone has been critical in pushing the market into deficit. However, and this is crucial, there's a dark cloud on this horizon. At current elevated prices, silver now represents over 30% of solar panel manufacturing costs, up from just 1.5% historically. Chinese solar manufacturers are already announcing plans to substitute copper or develop silverless panels. JP Morgan expects this substitution trend to severely restrict future solar demand growth. On the supply side, there's limited relief in sight. Only about 30% of silver comes from primary silver mines. The rest is a byproduct of copper, lead, zinc, and gold mining. This means silver supply is relatively inelastic. It doesn't respond quickly to higher prices. The one area of potential growth is recycled supply, as holders of jewelry and silverware cash in on elevated prices. So what should investors expect going forward? JP Morgan forecasts silver averaging $81 per ounce through 2026, more than double its 2025 average. However, analysts remain cautious in the near term, suggesting the market still needs to shake out the froth from the speculative excesses. The gold to silver ratio tells the valuation story. In November, it stood at 80 to 1. At silver's peak, it dropped below 50 to 1. Today, even after the correction, it's only back to 65 to 1, suggesting silver may still be overvalued relative to gold. Key wildcards that could move the market dramatically include tariff policy, particularly if the Trump administration decides to implement Section 232 tariffs on silver imports. Any such move could reignite the physical squeeze and send prices soaring again. The other major risk, central banks. Unlike gold, which has seen massive central bank buying since 2022, silver doesn't receive the same institutional support. This creates a structural difference that makes silver more vulnerable to sentiment shifts. The silver squeeze of 2026 has been nothing short of historic. What's happening in Shanghai with collapsing inventories signals genuine physical tightness that's far from resolved. While prices have corrected sharply from their extremes, the fundamental story, 6 years of deficits, booming industrial demand, constrained supply, remains intact. For investors, timing is everything. The violent volatility we've witnessed proves this market can move faster and harder than almost any other. But beneath the chaos, a structural bull market appears to be taking shape that could define the precious metals landscape for years to come. This video is for educational and informational purposes only and should not be construed as financial advice. The information presented reflects market conditions and analyst opinions as of February 2026 and is subject to change. Silver and precious metals are highly volatile investments that carry significant risk. Past performance does not guarantee future results. Before making any investment decisions, please consult with a qualified financial advisor who can assess your individual circumstances, risk tolerance, and investment objectives. The creator of this video is not a licensed financial advisor and does not provide personalized investment recommendations. Always conduct your own due diligence and never invest more than you can afford.